In this video, I'm going to teach you exactly how to trade Bitcoin, and even if you're a complete beginner, by the end of this video, you're going to know exactly how to trade crypto. And you can make a lot of money trading crypto, 10k a month, 100k a month, however much you want, and we're in a great market, an absolute fantastic market. I don't want you guys to miss out. So make sure you watch the end of the video. I'm going to teach you exactly how to trade Bitcoin so you can start making money today. Okay, so I'm on tradingview.com, right? Free website, and I'm on the daily chart for Bitcoin. And we're just looking at the overall trend. It's pretty obvious. We're in a massive bull market. You know, Bitcoin, crypto, all of them keep pushing up and up and up. And as I'm recording this, we're literally right at $100,000. And, you know, when you're watching this, we might have smashed it already. So what we're going to do is we're just going to look for longs, right? We're just going to look to buy crypto and buy Bitcoin because we're bullish and we just want to ride the momentum up, right? We never fight the trend and we just want to ride a price up. So we're going to get onto the lower time frames, the 5 minute, which is pretty good for day trading and scalping. And we're just going to start looking for entries, right? We're just going to look for any opportunity to get long, right? And there's 3 key times you want to be trading crypto every day, right? You don't want to just trade it, you know, whenever you get back from school or work, because, you know, you want to be trading when everyone else is trading. So the 3 key times a day you want to be trading is Asia, which is 8 p.m. till 12 a.m. Eastern, London, which is 2 a.m. till 5 a.m. Eastern, and New York, which is 7 a.m. till 10 a.m. Eastern. Those are the 3 golden times you want to be trading crypto because, you know, the most people are awake at that time. Lots of people are trading. You know, you don't want to be trading at a random time, right? Because if you trade at a random time, you're going to get these little tiny candles. But the meat of the move, the real moves in crypto, are going to be in Asia, London, and New York. Okay, so I'm going to give you an example of each of the 3 sessions so you can trade Bitcoin wherever you are in the world, right? And all 3 sessions are good for crypto because crypto moves a lot. And for the first one, we're in Asia, right? So Asia is 8 p.m. Eastern, right here, all the way up to 12 a.m. Eastern, all the way up here. And you can see, right? Pretty obvious, you can see. As soon as we start 8 a.m., we get a little retracement and a massive move up. This is why I say always trade the key times of day, Asia, London, and New York, because this is when you're going to get the real meat of the move. And you want to be trading this, because if you buy around here and you ride price up there, you're going to make a lot of money. And I'm going to show you exactly literally an entry you can do. So this move up, we know we're bullish. And if you know the direction of the market, you're 90% of the way there, right? You know, we're 90% of the way there. And we're just looking for any opportunity to buy cheap, right? Buy the dip. And a way of doing that is the optimal trade entry, which is you get the Fibonacci retracement tool, which you can get up here too on TradingView. You put it from the low, see this low here, all the way up to this high, because this was like the first like bullish move, right? From this low to this high is the first bullish move that we get during Asia. So you're gonna put your Fibonacci at the low, all the way up to the high, like that, right? And what you're gonna do is the 0.705 level, you're gonna enter on there. And the reason why is it's the perfect balance between risk to reward ratio. So when price hits 0.705, it's a fairly cheap level. So remark this out. So price has moved up and we're looking for any opportunity to buy the dip, right? And the optimal trade entry is essentially like a mathematical way of buying a dip. Every time it gets to 0.705, we buy. And then when we buy, we hope that price just does that, right? Just goes straight up like that. And, you know, you can ask for a really deep retracement all the way down here, but it's very unlikely that price is going to do that. Right, quite unlikely, you're going to miss a lot of trades. And 0.705, in my experience, is the best, right? It's literally the optimal trade entry for a reason. It's the best, you know, balance between risk to reward. You're buying at a good price, and you know you get a lot of entries. You get you actually do get a lot of entries with the optimal trade entry, right? And what you're going to do is you're literally just going to enter the 0.705 level. So let's get the risk to reward tool up. So let's say you went long right here. You put your stop loss at the low. Remember, we're buying at this low here, and your take profit can be at least, or it should always be at least a high here. So you always get around a 1.25 risk to reward ratio, which, you know, it might not sound incredible, but if you're risking $1,000, you're going to make $2,500 essentially every trade that you win, which is fantastic. And if you look here, right, you get, you know, a tiny bit of drawdown. Price comes, you know, it touches it a bit, and it instantly moves off in your direction. Now, 2.5 risk to reward, so targeting this high is at the minimum, I would say. It's the minimum, I would say, but you know, you could target this level here, the minus 0.5 level, or you can just keep it simple like I do and just target a 3 to 1. Right? A nice, easy, free risk to reward ratio. But if you look to the left, we have liquidity here. So what is liquidity? Liquidity is, see these equal highs? Let's just remove the Fibonacci. Right, we know the entry pattern, and we'll just keep this here because it's nice and easy. Liquidity is, you see these equal highs, right? Lots of highs here, and then price moves down, and then there's lots of highs here. Lots of people will call this resistance, right? We're around around $95,000. A lot of people are trying to call the top on crypto for some reason. Lots of people are super bearish on crypto. even ICT, right? So ICT himself thinks Bitcoin's going to go to zero, and he thinks it's not going to hit 100k. But there's actually a lot of people who think that Bitcoin is not going to hit $100,000. So they're looking to short. Short just means they're looking to sell. Right? They're looking to sell Bitcoin to whatever price they're looking for, and then they're putting their stop loss around here. Now, when their stop loss orders around here, that means there's lots of money at this high and this high, and price will go to where the money is. Right? That's where it goes. It goes to where the money is, and there's lots of money at this high here and this high here. And money is just what we call liquidity, right? Lots of money, lots of orders, lots of people want to do business around here and here. That's why the price always goes for these levels. And you see how it just smashes through it? See how it just smashes through it? And if you really wanted to, I mean, I'm not saying you should. You could have, you could target literally 100k and get a stupid risk to reward ratio. But there's a good chance that you might get stopped out too. But yeah. This is how you trade Asia, and I'm going to give you another example in London and New York. Okay, so we're in New York. New York is 7 a.m., which is all the way over here, actually. And look at this, right? As soon as it's 7 a.m. here, as soon as it's 7 a.m., price starts moving up. Like, literally starts moving up. It retraces a bit. This is important, right? Because this is, New York does this quite a lot, right? When we're bullish, New York will retrace and then start moving upwards. So we've got 7 a.m., which is here, all the way up to around 10 a.m. which is around here. You can trade till 11 a.m, but ideally you'd be done by 10 a.m. And what we're looking for, remember, we're bullish, so we're only looking for any reason to get long. Some people, again, are shorting here, but for the most part, most people are going long in crypto, right? They are bullish. We know where the direction is. And what we're looking for is we're just going to look for a fair value gap. Do you know how I gave you the optimal trade entry, which is just essentially a smart way of buying the dip, right? That's what it really is. And in this case, we're going to look for a fair value gap. Now, a fair value gap is, you see this candle, you see how there's like a gap between this wick here and this wick here, right? And you've got another one here. See this candle, see the body here, right? See how you've got a wick here and a wick here. That gap between this candle here, between here and here, is a fair value gap. Similarly with here and here is a fair value gap. Now, we only care about a bullish fair value gap. So I'm going to mark it out. This little gap here, very important, because price will often return to these fair value gaps, trade and consolidate a bit, and then quickly move off. And it will come back, come into this fair value gap again, and then quickly move off. Now, the reason the fair value gap is important is because there's an entity called smart money in trading, which is essentially like banks and hedge funds who have billions of dollars who actually move the market, right? Like, if you've got $1,000 into crypto, you're not moving the market, are you? But those with billions are actually moving the market. And a fair value gap is it's almost like an entry pattern that they look for, right? It's very important. The price always tends to come, fill these up, and then go off in the other direction. And this fair value gap gives you a great opportunity to start buying. So in this case here, so let's make this a bit clearer. This fair value gap here is a good buying opportunity. It's a bit aggressive, right? Because we've just come down. We've come down quite a lot, but because we're bullish, we know the direction of the market. We are all right. And for those of you who are a bit eagle-eyed, we have something called a liquidity sweep, right? And this is a bit more advanced. So lots of people, and I know I said last time, some people are going short rather, and most people are actually, saying they understand that crypto is going to go up to 100k. And the hard part with trading, this is so important, the hard part with trading is just putting your stop loss in the right place, right? A direction, everyone knows, or at least most people are aware, crypto's in a bull market, but, putting your stop loss in the right direction, in the right place, is always the hard part. And right here, there's lots of liquidity. Again, this key term, liquidity. Right here, lots of liquidity, because lots of people are going long in crypto, right? They want to buy. They're looking for any opportunity to buy crypto, put their stop loss somewhere safe, and then ride it all the way up to 100k. Right? At this point, we're around 93k, right? They want to ride price all the way up to 100k. Now, they're going to put their stop loss at, let's say, this low, because they think it's nice and safe. And that generates something that we call liquidity. Now, liquidity, like we said, is just managed how to write liquidity. And in this case, we have a liquidity sweep. Now, what is a liquidity sweep? So a liquidity sweep is, you see at this low, there's lots of liquidity, there's lots of money, there's lots of orders at this low. You see how price comes down, it wicks in, so it just comes down, takes out anyone who had a stop loss there, and then quickly moves off. Right? That's a liquidity sweep. Price only came down here just to take out people who had a lot of orders here. Now, the reason price does that is because in order for smart money, remember this entity who actually moves markets, to get their orders filled, they need to do business where there's lots of money. Right? They can't just buy randomly. Now, me and you, if we're buying like $1,000 of Bitcoin, you can buy at any price, literally any price, it's fine. You're not going to move the market. But if you've got 10 billion and you want to buy, $10 billion worth of crypto, you can't just buy it, on a random, place on the 1 minute chart. You have to buy it at a key time of day in a key area, right? It's the only time they can actually get their orders filled. And orders filled means just actually getting into a position. And at these lows here, there's lots of orders, lots of money at this place, right? And that means that smart money can actually get their orders filled. So price comes, takes out these lows. So these wicks here, it's just price coming down, making sure there's no stop loss orders that are still there. Right? So lots of people will have their stop loss either right at this low or around this area, right? Around this area. This is why price often wicks down a bit and then quickly moves off. And then it gives you a retracement, which is the fair value gap, and then goes off. Maybe give you another retracement and then go straight off like that, right? So what does that mean for us? Once we've got our liquidity sweep in New York, and this is characteristic of New York, because if you're a New York trader, you're in America or Canada or wherever you are and you trade the session, now this always happens. Price will come down, it will take out a low, usually London's low, which we'll talk about in a minute, which is 2 a.m. all the way over here till 5 a.m. Eastern, right? I'll take out the low there, because lots of London traders who bought crypto, they captured this nice move up here. They're going to have their stop loss orders here, hoping that price continues up. Price comes down, literally comes down just to take out the orders and then quickly moves off. And yeah, that is very typical for New York. So you usually always want to wait for a liquidity sweep. And once you get your liquidity sweep, you just look for your fair value gap, right? And in this case, it is a bit choppy, but the priority is just getting into the trade. And your stop loss is going to be at this low here. Now, why is it going to be at this low here? Now, price only went down just to take out this low here, right? Price only came to take out this low. It's gone back up. Very unlikely, as we're bullish, that price is going to come all the way down, take out this low, and then continue upwards. Very, very unlikely. So we can be very safe with putting our stop loss here. Now, in terms of take profit, which is the actual great part, is that we will at least target this high, I would say. At least target this high. So we get a 3-to-1, which means if you're risking $1,000, you'd make 3K on this trade. You could zoom out, but we're at all-time highs, right? Currently, we're at all-time highs at this point in price action. So it's up to you. I would always say aim for, 2 to 3 to 1 is very realistic. And if you were like a buy and hold trader, this could be a great buy and hold position for you. But yeah, for New York, you always want to wait for a liquidity sweep and then a fair value gap and then enter in that direction. Okay, so for the last example in London, I'm going to show you exactly how to trade this session. Now, lots of people are asking me about order blocks. So I'm going to give you an order block example. Now, an order block is usually it's the last down close candle before the up move, right? So you would say it's this candle, but when you get like 2 down close candles that are right next to each other, you can merge them together. And I often recommend that you merge them together because we're on the 5-minute chart, and on the 15-minute chart, see this candle here, this green candle, this candle, and this candle would form a 15-minute fair value order block. Sorry, these 3 candles right here would form a 15-minute order block. Now, what that means is that this right here would be an order block, right? You could just merge these candles together to get your order block. And I always recommend with an order block that you just take the easiest entry, because you don't want, you don't want to demand a very deep retracement all the way down here and price to go like that. Because you got to think, if Bitcoin is really that bullish, it's very unlikely that Bitcoin's going to come all the way down here just to let you get your entry fill and then go straight off, right? Because what would normally happen if we're very bullish is it just taps the order block and quickly goes off, right? Like we do here. You always want to, make it as easy as possible to get into the trade. And for London, it starts at 2 a.m. around here and it ends around 5 a.m., which is all the way up here. Now, characteristic for London, like we do in New York often has a liquidity sweep and then moves in the other direction. But London, you always get a fake move. So at 2 a.m. starts the fake move, right? So we know we're bullish for Bitcoin. We know we're bullish. We're just looking for longs. At around 2:20 a.m., we get a fake move down. This move down here is just allowing smart money to buy cheap, right? To buy cheap. So this is a fake move. Those who have no idea about trading are just selling this and they're getting lucky for a bit before price comes and takes them out. Now we're looking to buy. Right? We're looking to buy. And this order block right here is a great buying opportunity. And price comes right here at 3:05 a.m. It touches the order block and then quickly shoots off. So this order block right here is your entry. And for those of you a bit more eagle-eyed, you can just see there's a fair value gap here, right? And even though price wicks into it and shoots off, it's still valid because as long as the bodies don't close over the fair value gap, you're alright. But anyway, for this example, we're looking at an order block. An order block just being the last down close candle for the up move. And we're just merging these two together because it's a lot easier to get your order filled. And this is going to be your entry. Right here's your entry. Like that. Stop loss at the low. And in terms of take profit, you're going to target at least these highs here, right? So, sorry, let me just make this a bit clearer. At least these highs here, right? Lots of liquidity here. Lots of orders here. Or, if you wanted to target all-time highs, you have lots of liquidity here and lots of liquidity here. I would say realistically, intraday, you want to be trading in this area here, right? Because, if you're targeting all the way up here, you're going to be holding on for a few days. But this level, all the way up here, quite realistic intraday, like that. And you get a 7 risk to reward ratio. So if you risk $1,000, you'd make 7k. Right? Very realistic trade for London, especially for crypto, because this thing moves a lot, right? It's not like Forex where you get very tiny moves. With crypto, you get massive moves. And yeah, that is how you trade London session for crypto. And crypto is fantastic for trading. It moves very fast and lots of volatility. And as traders, we need volatility. And yeah, that's how you trade Bitcoin. There's lots of examples on the channel, so feel free to watch them if you need more help. And if you're really new to trading, I've made a full course that takes you from beginner to pro. It teaches you exactly what you need to know so you can start making money from trading, from crypto, Forex, indices, stocks, whatever. And feel free to check that out. But yeah, other than that, please like, subscribe, and leave a comment for the algorithm. And there should be a playlist on the screen right now teaching you how to trade for beginners. And yeah, I'll see you guys in the next video, and I'll see you guys in that playlist. Peace.